been a member of the club, and any other good stuff you'd like to pass on here. Chris. There you go. Hi. Do you want to give us some background, Chris?
This seems to be frozen.
Yeah, you're frozen. All right, Chris, we're going to pause you.
Yeah.
We're going to move over to RD. Oh, wait. Are you with us now?
Yeah, I need to move.
Okay.
Yeah, okay.
No worries. We'll give you a minute and then we'll jump over to RD. So RD.
Hi, I'm a business transactions partner at a law firm, Kaplan, Saunders, Valente, and Beninati. I've been a member of the club for a while. I was on the board of directors a while ago, and I'm here because I'm very interested in PPP, both for my own firm, which is now applying to amend its first round application. And we have some clients that are in the process of getting forgiveness.
Yeah. Okay. Thanks for being here, RD. Michael, are you with us?
I am with my wife, Stacy, and I've been a member for, 8 years, and we're both small business owners, and we're interested both in the upcoming PPP event as well as the forgiveness factor. My wife got PPP on the last round, and just what's entailed in the forgiveness factor for that.
What kind of small businesses are you guys in? I know this, but.
No, so
I own a scientific consulting firm.
Okay, cool.
I'm in a healthcare consulting firm.
All right.
Consulting firm.
All right. Very good. Thanks for being here. I hope you guys are enjoying wine, just like your photos shows that you are.
I know. If I was smart enough to know how to change that photo, I would do it.
Actually, we're having vodka and bourbon today.
Okay, well, welcome then.
So
yeah, we just left the club. We weren't even smart enough to know that this was a virtual event.
Oh gosh, darn it! I'm so sorry.
No, that's our fault.
No, our fault. It said location 1. We were like, "What's that?" They're like virtual.
No, bummer. Well, our next one, our TED Talk next month, is going to be in person, and it'll be the first big in-person event for the club. So don't miss out on that one.
Perfect.
Miss Kate, thanks for being here.
Hello.
Last minute admin. Thanks for coming on down.
No problem. Kate Curler. I'm again don't know how to change mine either, so I guess I'm always going to be an attorney in the virtual world. I have a law firm where I do elder law, so I help people figure out the right plan for grandma, and then what are the right resources and how do you pay for it. So
yeah, and Kate has been a busy little bee this past year, right, Kate?
yes, I have. Yeah.
For better, for worse.
Yeah.
Yeah. All right. Well, thanks for being here. Chris, we got you now?
Yeah, the internet in this room is better than the last.
We got you. Okay. Go ahead, Chris.
I'm a member of the club. I've owned a public accounting firm now for 30 years. I do the bookkeeping, tax accounting, payroll on about 270 corporations, partnerships, estates, and trusts. We do an awful lot in the PPP arena. The EIDLs, the employer retention credits, the EIDL grants, and of course the forgiveness on all of that. So I guess I'm just here to see if I can learn something or maybe add something if you need me to.
Got it. Okay. Sounds like you'll be nerding out with some of our speakers.
We'll see.
Well, everyone probably knows me, but I'm Marnie. I'm the chairperson of the Entrepreneur Group. I own a marketing and technology firm. We are currently super slammed. We are putting together a customized platform for a vaccine tracker. So anyone who's looking for a vaccine, we would sign you up and you would get push notifications to when a vaccine opens up in your area. It's been a whirlwind of putting all this technology together, but we're really excited and it'll be ready to launch. When they do, we'll see its first look at it tomorrow during one of our other events. But it'll launch to my client on Wednesday. So we've been really busy. When we're not doing that, we're doing websites and branding and email marketing and everything in between to help our clients just kind of get in front of the right people at the right time. But I love being the chairperson here, and I love helping other entrepreneurs kind of navigate different things of the world. In this case, there was a lot of questions that came out on PPP, not just within this group, but just especially as the administration's changed. I think that there's probably been some ups and downs on what's happening, and what do we do now with it? And that's why I brought in these lovely speakers. So we've got Joanna and Damien, and they're going to be talking. They're going to be kind of focusing on the meat of what we need to be covering here for all things PPP. And then we have Nadu, who's working with TriNet, and she's going to be covering kind of anything that they miss. She's going to be backing them up and getting things together. So I will do a formal introduction of both Joanna and Damien, and then I'm going to put the floor over to Joanna. For my people on the call, this is hopefully a conversation. So if you got questions, like, feel free to pipe in, raise your hand, chat me, whatever, and I will, try to get you in there as soon as possible, because we want people to be able to learn from this and feel really good about what you're walking away with. So Joanna and Damien are both of the BKD, National Commercial Services Group, and they do consulting and tax services for corporations, individuals, flow-through entities, and the whole kit and caboodle there. So that is covering for Joanna. And then Damien is the leader of the BKD Private Client Services. And he's doing tax compliance, and we'll be covering consulting and planning services for us little businesses that are out there. And then, you can handle any other problems that come bigger along the way. So I'm going to pass it over to Joanna, who is my top box here, and take it away. And you're going to be doing a screen share, right?
Yes. Well, Marnie, thank you so much for the introduction. Damien and I are really excited to be here tonight. The PPP and the ERC are both really important provisions right now. I'm sure you probably all have tons of questions. So, Damien and I, as we were putting this together, any one of these topics could easily be an hour of talking. So, we don't have the luxury of that kind of time tonight. So we've put together a few things that are kind of what people are talking about these days. But absolutely, if you have specific questions, we would love to hear them. Please pipe up, chime in, ask your questions. We want this to be really valuable time for you. Whatever questions you might have, if it's not particularly in our slides, that's okay. Damien and I could probably talk about PPP and ERC till tomorrow, but nobody wants that. So, and we actually, BKD, we do have a couple webinars coming up. Damien, one is this week on ERC.
Right. Yeah.
If you'd like to join us, and maybe we can put in the chat here a link to the webinar. It's totally free if you're able to join us for that and want to learn a little bit more about that topic specifically.
Yeah, please do. Please put it in the chat, Joanna, and I can put it in the follow-up material as well.
Perfect. So let's start here.
Yay! Thank you.
All right, with our content, and these are our lovely pictures and our contact information if you have follow-up questions after today, and what we can do is also share our materials with you after today. So what we're thinking is to kind of cover two topics at a high level, one being the PPP provisions, and especially the new things that have come out most recently since December. Talk about PPP2 and what might be different about PPP2 versus PPP1, and then talk about the employee retention credit. This is what I'll borrow a term from one of my partners, like a big damn deal. Okay, so if you have not heard of employee retention credit, or have not figured out if you qualify for an employee retention credit, or maybe some of your clients, then this is definitely something that you'll want to put on your radar screen.
Joanna, can I just ask a question already?
Please do.
There is something else, and I've done the forgiveness application for our firm, and we got a few $1,000s in the form of something else, some other grant or something that has to be repaid.
Is it the EIDL? EIDL?
I thought it was ERDA, but maybe.
Did you get an economic injury disaster relief loan as well?
That was it.
Yeah. And that is the case, and it actually doesn't need to be repaid any longer.
Ah,
It's kind of a nice thing. So
Yeah, I think when we did the forgiveness application a few months ago,
mhm.
that came off of the forgiveness, but then I read that that is now forgivable as well.
That's right. And the SBA, I think they actually maybe have already, so they'll work with your bank on it, but they're supposed to, they indicated they're already in the process of processing those. It's an automatic, but they're working with the banks to do that. So you should be getting that. They're going to be wiring the money to the banks, so increasing the forgiveness amount, and which would ultimately take care of the balance due that you had there. Or if
So
you
I don't
paid it
need to
off.
do anything on the application. Nothing needs to be done.
That's right. I was going to pull up their latest announcement on it just to check and make sure there was anything else. But no, the bank should handle it for you. No, that's a good question though.
All right, thank you.
Mhm,
Yeah.
certainly.
Thanks, Artie. Back to you, Miss Joanna.
Yeah, well, while Damien's pulling that up, one of the biggest issues with the PPP loan that came out last year was whether you could deduct the expenses, for example, the payroll that you paid with PPP funded money. And luckily, in late December, that was part of the latest provision. The Consolidated Appropriations Act made all those expenses deductible as well. So I know a lot of our clients are very happy about that, and that change was applied retroactively to all PPP loans that are out there,
Nice.
and PPP two, if you for that matter, if you're going forward.
Mhm.
Yeah.
Yeah. So Damien, I don't know if you want to go ahead and say anything else on this.
No,
or
but I
tell me
might
when
just
to
add
advance
there
the
is, I
slide.
mean, I do think that's a pretty nice benefit. I mean, the example I always give is if you had a $1 million PPP one loan, originally you were going to have, let's just say individual income tax rate is 37%. So you would have had to pay 370,000 of that base roughly back in taxes because you wouldn't have gotten the deductions associated with those expenses. And since they fixed that, then you basically got an additional $370,000. So pretty nice benefit to be had by all, I guess. It's created some interesting issues. It also got rid of some interesting issues for the geeky tax accountants that were worried about, how to report these things and some of the implications and whatnot. But yeah, I think there's still a lot of misinformation out there. Just people having that conception that you don't get those deductions.
Hmm.
Yeah. So maybe, yeah, because the way I kind of generally look at the PPP stuff is you had the big one there, right? The expenses and the non-deductibility. And I put that in the bucket of things that changed with PPP 1 and 2. So they changed the whole program overall. And we'll talk about a couple of those more now. The other buckets, though, are the fact that you can go back and there's, you can go get more round one. And I heard that kind of in the beginning there that, going back and maybe getting additional amount. So there's that piece. But then the third piece is obviously PPP too. So those are kind of the three buckets. So to kind of round out our first bucket, we no longer have the deductibility issue. We also have more expenses that you can use in the non-payroll cost bucket. And I'll even admit my first reaction was, well, why would I really care? Because most people are just using all payroll because it's a lot easier. And in many cases, with the original PPP loan, right, it was based off of 2.5 months of payroll that you got the loan, that you have 24 months to spend it. So if you go for, or 24 weeks rather, 24 weeks to spend the money. So in many cases you have 3, maybe 4 times the payroll if payroll stayed the same. So you have more than enough expenses. And so why would you care about, some additional non-payroll costs? And ultimately it comes down to this employee retention credit in my mind that, Joanne, I'll leave that for you to kind of unpack a bit more, but that's the big interaction point here, that if you haven't applied for forgiveness, there's maybe some planning to do if the employee retention credit's in play. And that's where I think these other buckets come into play a bit more. But they also come into play for PPP too, and planning there. So the last bullet point here, maybe just tease up the fact that anything that was a rule for PPP 1 is a rule for PPP 2. So you still have to spend at least 60% on payroll. So that's pretty straightforward. Well, there's some issues in there, but it's straightforward in this fact that it stayed the same at least. So yeah, I think those are some good ones to keep in mind. Yeah, here's actually the second point is our EIDL advance, right? And the fact that you don't have to You don't have to add that back any longer. So that's a nice benefit. And then there's a simplified forgiveness process for anybody with a loan under $150,000. So that's a really nice benefit. And the forms are available and out there and updated and working with the bank in terms of how to do that. But it dramatically simplifies the process, which was the big pushback they were getting. So I guess those are some big changes. Joanna, I guess if we go to the next slide, we kind of get into the PPP2. So maybe I'll pause before we get to the PPP2 and just see, does anybody have any questions on the changes to round one?
If you qualified for round one, can you also qualify for round two?
Not necessarily. There's a couple changes. So they, in round one, they didn't attach any decline in revenue associated with it. And so that's where this kind of hardest hit comes into place. They're basically saying that they want you to have experienced a decline in your revenue. And it's gross, defined as gross receipts essentially, for any one quarter in 2020. Or if you made it for the whole year and there was a 25% decline or more, then you can use that. It's an elective option. But if you get there in one quarter, in many cases it's Q2 for a lot of people, you would be eligible. You also have to have 300 or fewer employees. It was 500 or fewer. Now it's 300 or fewer for PPP round two. Those are the primary differences between one and two.
So go ahead, Damien.
Yeah, and I was just going to add on to that. There's still this economic uncertainty requirement that basically says that there is something in your business where you feel that there is economic need or uncertainty that would give rise to needing this loan. So, the difference, I think, where we are today of course, it's case by case basis, but where we are today as compared to where we may have been in, thinking back to March, April, May of last year. At that time, almost everybody I talked to said, we don't know what's going to happen. The sky is falling, the bottom's going to fall out. By now, a lot of businesses have stabilized and even have recovered from losses from Q2. So they may not be able to really hang their hat on whether there's an economic need or uncertainty. So even though, as Damien outlined, kind of these, what I would call kind of like check the box. Okay, do you meet this very specific requirement? There is still a little bit of a subjective test that says, do you have economic uncertainty in your business that gives rise to needing a PPP loan?
Okay.
And my general advice on that is to look at, for those in PPP round one that had loans over $2 million, either on the loan or an affiliated basis, there's a loan necessity questionnaire that's going around that the SBA is requiring you to complete once it gets. So the process generally is for forgiveness. You submit it to the bank, they do their good faith review, then they submit it over to the SBA to do their review. Well, when it gets to the SBA, that triggers this loan necessity questionnaire that comes back, and it's got two sections to it, a number of kind of specific questions that there's maybe been some concerns raised over why they're asking some of it, but they are, and that's the current version of the form. That form, like I said, was only being sent to those with loans over of $2 million and more, more than $2 million. We don't really have a threshold like that for PPP round two. Well, first of all, the maximum PPP2 loan, it's actually on the slide here as well, is $2 million. But in theory, the proving that economic necessity and the economic risk that necessitates the need for the loan, you have to do that for any amount of loan in theory for PPP round two, to Joanna's point. So I generally been saying, well, we don't know all of what that is. It's not a very well defined standard by the SBA and Treasury. So taking a look at that loan necessity questionnaire is a good place to start if you're gonna kind of go through that evaluation on PPP2 to decide if you have that factor there.
Okay.
Yeah. And I think maybe the other thing I'll just mention real quick here is, so you do get 3.5 months instead of 2.5 months for certain, so it's hospitality generally, that NICS code. The other thing that's different really between the two is on the first go round, there was an ability to use, the SBA has and this, the joke well, it's not even really a joke, but the thing I've been saying pretty commonly is the fact that, I haven't generally made my career out of spending a lot of time in the, reading through the SBA requirements and whatnot, but it was pretty unavoidable in this past year with the PPP program. But there's existing rules and regulations the SBA has had for these loans, and they do have size standards that were previously permitted for Section 7A is the section that we're dealing with of the SBA. And so they did let you use those size standards. So in some cases, you could have had more than 500 employees as an employer and still, or even on an affiliated group and still been able to get there for certain industries. You don't have that for this second round. They kind of quietly dropped that requirement there. So that's been an interesting byproduct too. But that's again for the larger groups. So I think those are kind of the main points on PPP2. Something I guess I'll mention that they did do is and actually, I guess we were talking about this earlier, that they announced this morning they're going to make some changes. They're actually going to put a 14-day hold on getting loans for anybody with 20 or more employees. So basically it's 20 or fewer employees will be able to get the loans starting Wednesday. So there'll be a 2-week kind of blackout for everybody else. They're also going to change, and we don't know yet how they're going to do it, but the calculation based off of gross profit for Schedule C filers. So for example, if you have your consulting business and you don't have it set up in an entity, but you're filing it on your individual income tax return with a Schedule C, it's going to be a more favorable calculation. But again, we haven't seen the details of that just yet. So that's coming as well. Although, well, I guess depending on the number of employees, it may be after the 2-week period. And they also released or relaxed restrictions for those that had defaulted on student loans and felons and a few other classes as well, in terms of being able to get the PPP2 loans. So that's a change that's just going into effect this week.
Yeah, a bunch of changes coming into effect this past week, and seeing those roll out is, good for the smaller businesses, because I know quite a few businesses, well, I shouldn't say quite a few, but at least one or two that applied in that first round and then the money was out, and then they apply again. And these are the little guys. These are the 5 and under who got beat out by the Chick-fil-A's or whoever those big companies were that came in and took the little guys' money.
Yeah, you raise a good point, Marnie. And the interesting thing that we are seeing, though, is just looking at how the loans have been spent down. Because I mean, it's the banks are reporting their numbers, and the money is expected to last, even outside of them kind of prioritizing those with a smaller number of employees. It has been nowhere near the rush that we saw, particularly in that first 2 weeks when PPP1 opened up. It's, we do think the money is going to last through the end of March, which is when technically the window. So they reopened the window and it's going to close again on March 31.
So can I ask another question?
Sure.
For personal gain. We've been told that we can apply to expand our round 1 PPP.
Okay.
We've also been told the application will be ready anytime soon. Any idea when one can actually apply? Maybe is it just our bank, or is SBA slow?
Yeah. So when you say you're applying to get basically you qualified for more, but
well, you were talking about running out of money. We had done our application, had not included owner compensation.
Okay, got it.
And then we learned owner compensation could be included, but if we amended, we'd go to the back of the line, and banks were running out of allocation.
Yep.
So now we'd like to amend.
Yeah. So the form is out there. And
can you put it in the chat or in the link here?
Yeah, I'll put it in there. Let me pull it up. But so I'll answer your question. But yes, I mean, you should be able to go ahead and do that. But it is, and I kind of feel for the banks, honestly. It's been pretty tough. And actually they were even saying, like, with some of the additional changes, it's just been very, very difficult to get the program up and running on their end. So I will I'll post it in the link, Marnie.
Okay, that'd be great. In the chat, just whenever you have it.
Oh yeah, sorry, in the chat. Yeah.
Okay, good. So RD he's gonna get you covered there, it sounds like.
Yeah.
Okay. Right, perfect.
And then maybe just the other thing just to mention as I'm kind of pulling it. So it's form 1502. So I'll send you more about it here in a second so you can have it. But that is the form number for a supplemental request. and I'll track it down and put the link there. But the other thing to think about is if you are eligible for a PPP-1 loan, you have to do that before you get a PPP-2 loan. You don't have to have been forgiven of it, but you have to have gotten it and spent it before you can get the second one. So that's a requirement. And then I think, Joanna, was there something else on that previous slide that I was gonna mention?
It was just about, you know, if you have to still be in business.
So in business, and
then if you're not,
shuttered venue, yeah.
the SVOG.
Yeah.
So the shuttered venue, if anybody's not familiar with that, is really for movie theaters, concert halls, museums. Very special provision. It's set aside like $15 billion for that. But if you or any of your clients are thinking about that, it's one or the other, not both.
Got it. And what if you didn't apply for round 1, but you want to apply for round 2? Are you in the clear?
No, so you actually do, if you didn't want to do 1, you actually have to go back and apply for 1 before you can apply for 2.
Oh, you even have to still apply for it.
You still have to, but you can go back and apply. Yeah.
Okay.
So they reopen that as well. But
but then you have to spend your money before you can get round 2, which might be the timing problem. Yeah.
Yeah.
Got it. Okay.
Yeah. So that's kind of the take on the PPP, I guess. Maybe just the last comment I'll make, because I've been getting this question a lot, is, well, what about those $2 million loans? I'm aware of, and they're actually not any of our clients. So I'll tell you, I'm not aware of any of our clients nationwide that have been forgiven of a loan of $2 million or more. It's apparently a law firm out of DC that got forgiven very early on, before the questionnaire even was a thing. But generally speaking, anybody with a loan of $2 million or more has not been forgiven yet. I don't think that's necessarily a bad thing. It just means they haven't figured out how they're going to process them. So I don't know if it applies to any of you or your clients, so those you're talking to, but that's probably almost the most frequent question I get is, what's going on with the $2 million loans? And the answer is nothing.
Damien, if I can interrupt, the SBA has told us that they will automatically audit all of those loans over $2 million.
That's right.
That's why they haven't actually, they haven't figured out how to audit them yet. I mean, they haven't figured out if the SBA is going to do it, or if the IRS is going to do it, or how they're going to do it in the first place. So they forgave the 1, but that was just a paperwork slip up.
That's right. Yeah. Yeah. So I guess with that, maybe before we go to I was gonna say the big damn deal, as Joanna was talking about with the employee retention credit. Any other SBA PPP related questions?
I've got all kinds of questions.
All right, good.
All right, shoot.
I've got another situation where a client is selling their property to somebody who wants to get an SBA, just a normal, regular SBA loan. Is SBA sufficiently staffed to handle their regular business?
I have not heard any issues with that otherwise, no. I think they are, and I think they're still processing. I mean, I will say that, PPP is strained this go around, and because they put more restrictions in place to make sure that there was not as much fraud, I guess, and the concern of people getting them that shouldn't be getting them. But I guess I haven't had direct experience as of late, but I have not heard of any delays on kind of the regular, SBA related loans that you'd be looking at getting.
Frankly,
maybe the exception I'll make to that, though, is the fact that and this is kind of slightly unrelated. I mean, last week with everything that happened in Texas, the Austin Service Center for the IRS is where they process all the tax verification requests. So the service has acknowledged that they fully shut down for a period of time, and they're gonna be delayed in approving. Even
all the mail is frozen and they're covered.
Well, the mail's frozen, right? And then, and even like the electronic requests for like mortgages and whatnot, like they're going to be delayed in responding to those. So there might be a holdup there, but I think the SBA in and of themselves are not struggled there. So yeah, I know it's a mess.
Okay.
Artie, the guy that approves all of those is a friend of mine, because I teach down at SCORE. I teach all their accounting and finance courses.
Okay.
And he's still working. I mean, he's busy as hell, but again, he's still approving everything. So you shouldn't have any problems with that.
Cool.
Great. Good to know.
Hopefully not. Thanks, Chris. Okay, so going once, going twice, going 3 times on PPP. Dun, 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 dun. Okay. What else we got there, Miss
All
Joanna?
right. Employee retention credit. Let me get this back up here. Employee retention credit. So, you know, as I mentioned earlier, this is like the really big damn deal going around right now. And it's kind of a lot of information to digest. So I'm going to try and go quickly because there's just a lot to go over. But I've got a little a little chart at the end of the slides, which will I hope will help boil this down a little bit. The employee retention credit was something that didn't get a lot of attention when PPP came out because there was a provision that was put in that said if you got PPP, you could not get employee retention credit. And so everybody's really focused on the PPP, and very, very few companies, and you know, at least in our client base, were really worried about the employee retention credit. What they did in December was they went back and they retroactively changed the law and said, all right, you can get employee retention credit even if you got a PPP loan, as long as you're not using your PPP money to pay payroll and trying to claim employee retention credit on the same payroll. Okay. And then they went into 2021 and they basically, this is my term, supercharged the credit. So there's a credit available in 2020, more limited, but a really big credit in 2021 if you can qualify for it. So let's talk about what the credit is. And again, I'm going to try and keep the years separated. So in 2020, you can get a credit of 50% of wages that you pay to an employee up to $10,000 of wages. So basically a $5,000 credit per employee is the maximum that you can get, okay? And in order to qualify for this, you would have to meet one of 2 tests. One, either that you were fully or partially suspended in any of your locations due to government order. That can be federal, state, or local. So I know, like, for example, here in the city of Chicago, we had a lot more restrictive shutdown requirements as compared with maybe the state or other states, things like that. So that's test 1, or what's called a significant decline in gross receipts. Okay, so you only have to meet one or the other, not both. And what do we mean by a significant decline in gross receipts? Where your receipts are dropped by 50% or more as compared with the same quarter in 2019. So again, for the most part, most of our client base is seeing this in the second quarter of 2020, very similar to, you know, PPP impacts. So basically, if you look at your second quarter of 2020, this is when most everybody was shut down in some way, shape, or form. And again, the shutdown doesn't have to be complete. We can talk about more if people have questions on this, on what constitutes a full or partial shutdown. There's a number of frequently asked questions on the IRS website, which go through a lot of these kinds of examples. But basically what I was saying is, you know, with this decline in gross receipts, if you have a 50% or greater drop in second quarter of 2020 compared with second quarter of 2019, then you've tripped the wire, so to speak, and you can qualify for employee retention credit. And again, we're looking at possibly up to $5,000 per person. So real simple example, if you got 20 employees and in Q2, the bottom dropped out and you said, wow, my sales really dropped a ton. If you could get $5,000 a person, I mean, $100,000, if you have 20 employees, that's a pretty good chunk of change, right? And so this is the thing that we've been talking about a lot with our clients. And these are our credits. These are credits claimed on a payroll tax return. Let me see if I've got a slide in here on this. Okay, well, let me go through a couple other technical points before I go to about how you claim this credit. So one more thing is, depending on the size of your company and the number of full-time employees that you have. So if in 2019 you had fewer than 100 or fewer employees, then all of the wages you pay for whether that person is working or not working, you can claim as a creditable wage. If you have more than 100 employees, then you can only claim credits on wages paid to people who didn't work. So for example, if you furloughed somebody and you continue to pay their health insurance, that could be a qualified wage. We've got some clients who continue to pay their people maybe at a reduced amount. So maybe they paid them 80% of their regular wages, but if that person was not providing any services, then you can still get a credit on those wages and things like that. And this 100-person cutoff is really important for both 2020, for like important point to remember for claiming this credit.
Joanne,
Yes.
just curious, can a not-for-profit get the credit?
Yes. Yes, it can. Yeah,
So
because
it becomes a government subsidy.
yeah, so what happens is these credits are claimed on the payroll tax returns, the Form 941s. So most nonprofit organizations do pay payroll taxes of some kind for their employees. If your credit amount exceeds the amount of tax that you owe, it will become refundable. So the government will actually send a check back to you if you fall into that category.
Okay, thank you.
Any other questions on how the 2020 credit works?
If I can piggyback right off of that original question just now, in terms of not-for-profit being eligible, is there any specific industry that wouldn't otherwise be eligible to receive this type of credit that you can think of?
Not necessarily, I would say, specific industry. One area, and I don't know, Damien, you could think of any. The one area that I know, at least our firm has been having a lot of discussion about, are like private equity owned companies.
That's exactly why I asked.
Yeah, so private equity owned companies. Okay, so kind of just to set the stage as to why I'm going this route. You know, a lot of private equity owned firms haven't been able to necessarily take advantage of a lot of the provisions that have been put into place. And part of that reason why is, you know, the government requires these companies to aggregate all of the port codes together, all of the operations that they say is you're under common control. And very often, most often of the times, private equity owned firms are under control of a fund. Okay. And so what they say is that's fine. You can qualify for these things, but you have to look at all of the port codes together. So meeting some of these requirements for a decline in gross receipts of 50% or more can be very difficult to achieve when you're looking at 10, 15, 20 companies together. So, you know, again, this is an area that I'll just put this little asterisk up in our conversation right now. This is an area that I think is under review right now. So I wouldn't go so far as to say they're absolutely out, but I think it is, if this is something you're thinking about, that definitely kind of proceed with caution.
Okay.
And I will say that, yeah, maybe when you would look at by industry, maybe you'd say that there's those that maybe were less apt to be shut down. So, you know, where you wouldn't have actually had the shutdown, and so you wouldn't have been able to get there that way. And maybe you didn't experience the decline in gross receipts. So a lot of times, like banks, for example, those are ones that we've seen because we work with a number of those in our practice. I guess Joanna and I don't specifically work with them, but there was a number where, because basically they were saying that you wouldn't qualify for the partial shutdown, potentially under the IRS guidance and the way they addressed it in the FAQs. So I know there's a number of banks that perhaps wouldn't have gotten there. So I think that's maybe where you would see kind of industry. But even within that, you can still, if they had a decline in the gross receipts, then you'd still be able to get there. So I think, yeah, Joanna, I agree that the private equity is probably the most broad. And again, that's not even across the board, because you still could have been able to get there. So it just depends. But it's worth asking the question, I think, for almost anybody, really.
Just to clarify on the private equity, if a fund owns a bunch of movie theaters and an internet supply business. And so the movie theaters are wiped out, but the supply business may have grown. So you have to total those before you can look at these decline numbers.
Yeah, so the question that is being debated right now is the application of the aggregation rules. So the employee retention credit says we have to look, I'm gonna get a little bit nerdy right here, Marnie, I hope that's okay. So we have to look at Internal Revenue Code section 52 and section 414, which talk about the controlled group rules. And so a lot of this harkens back to, like, if you remember, maybe I think it was 7 years ago when like the ACA rules were put into place and who constituted a single employer. Very similar rules to that, same rules as what applies to 163J. Basically, the question is every portfolio company considered to be a single employer together because of the fund, the common ownership in the fund? If the answer to that is yes, then you're correct. You need to aggregate everybody together. Your losers and your winners all go in there together to determine whether you're eligible or not. Now, the advantage to this might be, all right, well, my movie theater was shut down, my internet supplier was not. So my internet supplier, would not have ordinary qualified on their own, but they do now qualify because my movie theater qualified, and we're all one big happy family. Okay, that's maybe one of the advantages. But one of the disadvantages is this employee count. So in a lot of times private equity, you're going to very easily be over the 100 mark, whereas you may not have got it otherwise. And then, the third question is, are you paying people to not work? That's always, a question is like, is that a fact pattern that applies to you? So, like I'm saying, this doesn't mean private equity is automatically out. It just may have a slightly higher hurdle to make it. But our firm has had a lot of conversations with several law firms across the country on the application of that aggregation rule.
Okay.
Okay. Any other questions on 2020?
Dun, 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 dun. Nope.
No. All right, let's move on to 2021, because I think here's where it gets really interesting. Okay, so like I said earlier, this is where it gets supercharged. So in 2021, the credit rate goes from 50% to 70%. So in our same example before, if you had $10,000 of wages, you can get up to $7,000 per employee. The second part that was supercharged was it's $10,000 per quarter instead of $10,000 per year. So, and this is good for the first 2 quarters of 2021. So let me say it to you this way. If in 2021, you pay somebody $10,000 in the first quarter, $10,000 in the second quarter, and you qualify, you could get up to $14,000 back for simply paying that person. Okay, so that's a lot of money, especially if you got 10, 20, 100 employees. That can be, we've got some clients with 300 employees. That is millions of dollars in employee retention credits. Okay, and then the other thing that they did is they relaxed the rule a little bit. Your decline in gross receipts only has to be 20% instead of 50%. Remember, in 2020, it was 50%, 2021, it's 20%. And the other big kicker here is your base year is still 2019. So let me say it to you this way. You'd be comparing Q1 of 21 to Q1 of 19, not Q1 of 20, Q1 of 19, kind of like your last quote unquote normal pre-pandemic year. And there's this little option to use Q4 of 2020 compared with Q4 of 2019. But I think these are 3 really nice ways that the employee retention credit has really been supercharged, and I think will qualify a lot more people for this. Okay, and then the other thing, remember that 100-person employee headcount limit was increased to 500. Okay, so before, if you had between 100 and 500 employees, you could only get credit for wages you paid to people to not work. But now, if you have less than 500 people, you can earn this credit on any wage you paid to anybody working or not working. So it's a really huge expansion of the credit. And let me see if I know I've said a mouthful. So I've tried to boil it down to kind of like the key provisions here, because it's just a lot to absorb. Okay, what is your percentage of credit for your wages in 2020? It's 50%. In 2021, it's 70%. And your maximum credit is $5,000 per year per employee. For 2020, $7,000 per quarter per employee in 2021. And then the eligible period, 2020 starts on March 13th through the end of the year. And right now, the 2021 credit, I see I have the wrong year in here. It should be June 30 of 2021. Apologize for that. And then the employee count going from 100 to 500. And then lastly, you only need to have a 20% decline as opposed to a 50% decline. Or, like I said before, still shut down by government order. I've got a couple clients in California who they are considered a non-essential business. They are still shut down to this day.
Wow.
So they are still able to take advantage of this. All right, let me pause there. And I know I've thrown a lot at you. Any other questions on employee retention credit?
Dun, dun, dun. Anyone? It doesn't seem like it. And
Okay.
I know, Joanna, that Nadu can also speak on the best practices for ERC and PPP. So I don't know when the best time for her to kind of give her 2 cents on that. Is that now or in
Yeah, that was kind of everything that we had prepared in case there's other questions, or if Nadu, you would like to jump in here and say anything else.
Yeah.
Thank you very much. I think, it's fascinating how much information is out there about all this different stuff. TriNet being an HR provider, I mean, these questions inevitably come up, right? And so what we've been able to do for our clients, our partners, as I like to refer them as, is that we've actually created a group, dedicated individuals within this group that address nothing but PPP information, questions, how do you type of thing. So I guess on the topic of best practice, one thing I would highly recommend that you and your clients consider doing is doing some really good record keeping. I'm talking to a client right now who is looking at the possibility of switching for the second time payroll providers. And so with that in mind, you can imagine, having had lost access of the first part of 2020 when this whole thing was unfolding, and then switching payrolls, and then learning that he no longer had access to the prior payroll providers' records, which are essentially his records. So just be aware that these things do happen, and you don't want to be caught in a situation where now you don't have access to information that you desperately need in order to execute on things that are as important as the loans that we're discussing today. So highly recommend that you guys keep records, and you have exactly know where to go. If you have people that are transitioning within your organizations or clients' organizations, also be aware that, again, going back to that record keeping notion, making sure that, if the one person has access to where that information might reside, that someone else in the organization also is aware. And it sounds so silly to even say it out loud, but I cannot tell you enough in my world how many times we've seen that happen. And then we're trying to help our clients repair these type of mishaps and what I call missteps in trying to gather information that otherwise was already there, but no one really knew exactly where to get. So record keeping is extremely important, especially when dealing with this and the forgiveness part of it and the application that goes along with that stuff and what documentation is going to be required of you to have these loans forgiven. Second is also that I know that there's a ton of information. I mean, Google, friends, my accountant, my friend who's an attorney over here. There's just so much information, what I call noise, when it comes to this type of thing. But we ideally, what we want to do is not become expert on the subject matter, but understand what resources you do have available, whether it's within your own organization or with providers that you guys are working with currently, because it is a lot to digest and it's just not to be taken lightly. But more importantly, do tap into those available resources that do exist in asking the question, because many times, as Joanna and I have seen, people are just not aware of what the parameters are and whether or not they fall into it or not. So that's what I mean about, being able to tap and just simply ask the question. You don't get, you don't You don't ask, you don't get is my motto.
That's
So
fun.
just basic stuff that I think would be impactful in your everyday life, especially as you consider to make changes and things of that nature that would impact, getting these things issued and then forgiven.
Mhm. So we've gone through a lot of stuff here, and I don't know if anyone else on the call has any other questions, comments. We are with the obvious experts here, so if you have questions about PPP or questions about the employee retention, like now or forever hold your peace kind of thing, because I have a few more things I can throw out, but I'd prefer to leave it to the room. RD, no more for you though. You've asked too many. I'm joking, RD. So is there any, it sounds like this next round is going to be good for these like smaller businesses. Any suggestions for them, for these smaller businesses in general? And that's what a lot of my clients are. Most of my clients are probably under 20 to 30 employees. And, some of them got the first round, some of them didn't, some of them have been too frustrated or scared. And some of them, there's just been all this up and down of, like, where do we start? What do we do? And, is there like a step-by-step that we should be going through? Do you go to your bank? Do you go to another bank? Like, lots of questions. Go for it.
I guess my general advice is, start with your bank. And then if they're not working, that we already have the relationship. And if they're not able to do it or handle it, which is the case in many cases, where they're maybe not as interested in doing round two, or, so you need to kind of then keep looking around and shopping for banks that can and will do it. I know, like Chase, for example, I've heard firsthand on some of the smaller ones, they've started to turn people away for PPP round two. So I think it's just a matter, the banks are out there. I mean, I know of a number of them that are processing them, but if you get a no, it's keep going. And I think it's also, and kind of back to your comment earlier too, right, about the documentation and whatnot. I think that's the part that's overwhelming. And it's just taking it one step at a time and starting with a loan application. I think if you do that, just gathering the information, that'll take you a lot of the way there. And then just asking the right questions, and and if you don't know the right questions, just asking questions, perhaps.
Yeah.
So,
Idiot's Guide to Asking Questions, please.
That's right. That's right. Yes. Yeah. That's
Yeah,
kind of my take.
And the last thing I would just say is, Amy and I have both done a lot of work in both these areas over the last 10 months or so. So, if you or your clients have specific questions, we're happy to sit in on a consult with you and just kind of chat about things and evaluate, help point you in the right direction, things like that. And, either provide you resources or information that we've seen, or just talk to you about it. Please don't feel shy about reaching out to us.
All right, you guys, you hear that? I will be providing, do you guys mind if I share your information?
Marnie, can I interrupt a second, please?
Obviously.
What my young colleagues haven't done is a nice wrap up. So let me maybe do that for a second. A lot of my clients are asking, what's better? Is it the PPP or the employer retention credit? And the real question comes into the math. So let's sit down and do some real quick math. If you have, I don't know, how can I set this up? If you have 10 employees, maybe making 10,000 a quarter or 33 a month, what is that? 33,000 a month times 2.5, 33 and 66.5 gets you to about 83,000 in PPP loan. Does everybody agree with me?
Yeah, sure.
2.5 times 2.5, okay. Versus maybe the employer retention credit. Okay, so we're at 10,000 a quarter. I've got 10 employees. I've got 100,000 in payroll, or 70,000 per quarter, or a total of 140,000 in employer retention credit. Does everyone agree with that? Obviously, the 140 is better than the 83. That's scenario one. Let's look at scenario two. Let's say you have 10 employees that are in just under the PPP limit of 100,000, or about 8,000 a month. Okay, that's 80,000. That's 80,000 a month in payroll times 2.5 would get you to a PPP of what? 80 and 80 is 160, and half of that is 40, so a total of 200,000. Everybody with me so far?
You're kind of
Okay.
losing me here, Chris, but I'm trying to follow.
I'm not alone.
Again, you've got 2.5 times your 80,000, or that's a $200,000 PPP loan. Okay, versus your credit is going to top out at 10,000 a month. So your credit's still going to be 140,000. So in that instance, the PPP is going to be better than the employer retention credit because of course you're going to get more money. Is everyone with me so far?
Nope, I am out the door.
How about you, Artie? You with me?
I'm with you.
Okay. Understand that
Assuming
what I'm,
PPP will be forgiven.
okay,
But
the
I think-
PPP will be forgiven, but the retention credit, you don't have to have forgiven because it's not a loan. What we're doing with all of our clients is actually a wraparound. We're doing both. You cannot use the same payroll to claim the retention credit that you're using for the PPP loan forgiveness. So let's say that you got a PPP loan on February 14th, on Valentine's Day, let's say. Well, then at that point, you can certainly claim the retention credit January to February 13th. And then you'd use your PPP loan, your payroll for the loan forgiveness up until the date that it was done. And then you can still claim the retention credit. And normally in doing that, you can increase what you're getting by at least another 70%. Again, it depends on the payroll and everything else included, and it's very complicated payroll work. The 7200 form is not an easy thing to do. And frankly, the IRS is having extreme difficulties in processing them. But that being said, all of this stuff shouldn't be thought of as one or the other. Certainly it should be thought of as both.
Okay.
Can I ask, I know I've been shut down by Marnie, but I,
Well, now Chris is getting shut down with all these numbers.
what's the prediction for round 3? And
Is there a round 3?
Let me just say that, this, what's in Congress right now includes a round 3. And I got something from the National Club Association, which is had, on one hand, it expands it to include all 501c3 or all 501cs, but SBA rules would limit private clubs on taking PPP. Anyway, that's one issue that I've been made aware of, but where's it going from here?
Once they pass the law, we'll be able to actually take a look at it. I mean, these laws are what, 5,000 pages in length. They're impossible to read in the first place. And you'd probably be better at reading the legalese than I ever would, RD. But that being said, we'll see what they pass. We'll see if they can get something passed. We'll see where it goes.
What Joanna and Damien, any insight there?
Yeah, I think it's on I mean, it's more or less expected to kind of continue through. I think there's gonna be some tweaks. We don't have the bill yet, to your point,
Right.
Chris. It's just, they're still assembling it. I think they ran into a few snags. As they compiled it under budget reconciliation, it exceeded the $1.9 trillion amount. So they're having to do some tweaks in there. But I think they're still supposed to bring it before the House this week and pass it in the next couple of weeks. Is still the expectation of what everyone in Washington is saying. But it wouldn't make significant changes. The big change would be that the ERC would be extended out for the last 2 quarters of 2021.
Right.
But I mean, it's really provisions that are kind of beyond those that we were talking about today, I guess, largely.
Got it.
So
Okay, well,
we'll see.
thank you. Any other questions from the crowd here? Because I'm going to wrap this up. Is Joanna and Damien, thanks so much for all your insight, and it really helps put a lot of things in perspective and hopefully helps people on this call to make some better decisions for themselves moving forward. Nadu was the one who kind of made the connection here of getting these talked together, and obviously has a lot to contribute.
Joanna's a rock star. I wanted to make sure we all had an opportunity to hear what she had to say, because I feel like there's a lot of, noise, as I said before, around this topic that is very relevant and very important. And so thank you both for making this happen.
Definitely.
Appreciate the opportunity.
Yeah. And Joanna, if some good questions for people to come to you for. I assume I can put your name out there and say, hey, if you
Yep.
have questions, follow up. Hopefully it's not too much of a pain, but I know there's quite a few people that RSVP'd to the call and weren't able to make it. So we record these calls and allow them to view them in the future so that they can, pick up. People can nerd out on this anytime they want in the future. So I'm going to close this portion of the meeting and just invite everyone, including our guests, to our first annual TED Talk. Can't call it a TED Talk because it's not really, and it's TED sanctioned talk. But we are hosting a TED-like talk on the last Monday of March, which is March 29th. And the topic is going to be on gratitude and happiness. It's going to be half at the club, half at Union League, and half it on a Zoom. So I think we're taking up to 25 people in person with a bar, and it's going to feel kind of like the old times. Everyone's socially distancing, of course. But I'm really pumped. We've got 5 great speakers on happiness and gratitude and what that's meant, especially over this past year. So please come on down, please pre-register. It's already, last time I checked, it was doing really well online as far as people signing up for the in-person. So come on down. I'll be emceeing it and keeping everyone squared away. But that's my last plug. Otherwise, thank you again to our speakers. And Damien, thanks for sharing all this stuff in the chat. I've grabbed it. I'm going to make sure it gets put in with our other information as well.
Great. Our pleasure.
Okay.
Thank you.
Awesome. Thank you, everyone. We'll see you guys later.
See you later.
Thank you
Bye.
all.